The other thing I want to point out is private finance, which is the yellow. Private finance essentially was zero when we came out of World War II. There essentially was no private financial sector debt. And then it grows, and especially rapidly in the past 20 years, to 125% of GDP. What is this? This is the financial sector owing itself. It's layering of debt on debt on debt. It is financial institutions that finance their positions in assets by issuing debt to other financial institutions, rather than issuing deposits to households and firms. And I'll talk about, probably tomorrow, why this is much more dangerous. This is what links all the financial institutions together so that if one fails, they all fail. Because they all owe each other. And that's exactly what happened in the global financial crisis. They all owed each other, and as soon as one, whether it's Bear or Lehman, gets in trouble, they're all in trouble. When AIG gets in trouble, they're going to bring down Goldman Sachs. Okay? Because they all owe each other.
What is GSE?
Oh, government-sponsored enterprise, quasi-government financial institutions like Fannie Mae, Freddie Mac. Those were growing. I don't know why it is shifting on some. One other little piece, because we read chapter 12, Keynes says, when speculation dominates over enterprise, the job is likely to be ill done. Okay? So looking at the stock market, if you see in the 1920s, we had so much speculation going on that the average stock was held for 1 year. Okay, and that is with widows and orphans who never sell stocks. They buy them and hold them forever. We still had so much speculation in stock markets that the average stock was held for only 1 year. We crash into the Great Depression, and you can see that the average holding period goes to 10 years. That is not speculation. In other words, the Great Depression, the stock market crash in 1929, wiped out speculation in the stock market. People did not speculate in the stock market anymore for a long time. Gradually over time, speculation starts to increase, and you can see by 1980, it is starting to dominate, and then it continues to dominate all the way up to the crash, and it still is dominating. So the average holding period now is actually lower than it was in 1929, at the peak of the stock market bubble that crashed. So speculation is dominating the stock market. The stock market is not financing investment, it's purely about speculation.